Thank you, Nirav. A very good afternoon to everyone. Today we have the management of AllCargo Logistics for Q1FY21 earnings conference call. We have with us Mr. Prakash Tulsiani, CEO, CFS and ICD Division, Mr. Deepal Shah, CFO, AllCargo Logistics, Mr. Ravi Jakar, Chief Strategy Officer. I will now hand over the call to the management for opening remarks. We'll then follow up with the Q&A session. Thank you and over to you, sir.
Thanks, Alok. Hello, good afternoon, everyone, and welcome to today's earnings conference call to discuss the performance for the quarter ended 30th June 2020. Along with me, I have my colleagues, Mr. Deepal Shah and Mr. Prakash Tulsiani. I hope you've had chance to review our financial statements and the earnings presentation, which have been made available on the exchanges and on our website. Let me share a quick overview on all the businesses. It has been an exceptional period for business with unprecedented lockdowns and constraints in India and across the world, which have impacted the business. However, we have ensured that best efforts were made to continue business operations and service our customers to their satisfaction. There has been an impact on revenue, but across the group, we have taken significant proactive steps in reducing our costs, and there has been support from various international governments as well in form of subsidies and grants to support the business in times of pandemic. In the international business, there have also been gains from exchange rate benefits when compared with corresponding quarter of the previous year. All these have allowed us to maintain healthy bottom line despite a fall in volume from approximately 184,000 TEUs to 162,000 TEUs. In India, we faced challenges in express logistics because of lockdown, which significantly reduced business in April. However, recovery started from May. As a result, Gati financials for the quarter have been significantly impacted. Similar challenges led to an impact on performance of project and engineering division as well, as infrastructure projects came to a halt in April and recovery only started from May onwards. The lockdown has also impacted our logistics park business, where we had signed an agreement for an equity transaction and are in the process of getting necessary approvals required to conclude the transaction. However, limited functioning of some government departments and restrictions otherwise have caused some delays. We remain confident that we will be able to consummate the transaction and overcome the delay and challenges, as the situation is now expected to improve in coming months. Overall, economy was sharply hit in first quarter in India, but things have improved since then, and we are hopeful that they would continue to improve and we would see a much better scenario going forward on the macroeconomic environment and therefore greater opportunities for us in business as well. I would now request my colleague Prakash to share brief details about our CFS business. Over to you, Prakash.
So, Ravi, thank you very much for the complete details on where we are in terms of India business and also what has COVID done to all of us. So coming to the CFS, we have a severe impact on our import volume, and also there has been impact also on the export, but severe on the imports, and which has caused a reduction in volumes handled by our CFS. The total volumes for the first quarter of financial year 2021 were at approximately 49,500 against 85,000 for the corresponding period last year. So you can see that the numbers are almost in the range of 50%. That is, we are operating at. It has been a severe one because the vessels came lighter. Not only the vessels came lighter, they also skipped calls. See, it was clearly the demand which was missing, and that's the reason that CFS has also suffered the volume impact. Have we improved thereafter? The answer is that yes, there is the challenging challenging period right now for us, and the volumes are slowly increasing. So what we expected that, July, August should be the month of recovery, we have not yet seen that. So it's been a very tough environment, and while we may have delivered our EBITDA, but that is only on one-time, ground rents that we collected. So overall scenario for CFS is not looking that great as we go ahead. So that's it from our side. Thank you very much. Over to Deepal for taking us through on the quarterly numbers. Deepal, over to you.
Thank you, Prakash. First, let me highlight that it would be difficult to compare the quarterly financials with the previous periods due to the consolidation of Gati in the books from this quarter onwards. So this is the first quarter that we have actually consolidated Gati post-acquisition. Secondly, as you know, the quarter has been impacted by lockdown and disruption in operations, not only for AllCargo but across all companies. With all that said, let me now take you through the key consolidated quarterly financial highlights. The total revenue from operations stood at rupees 2,078 crores for the quarter ended 30th June 2021 as compared to 1850 for the corresponding period last year, which is an increase of approximately 14.4%, mainly on account of revenue growth in MTO business and the CFS business, and of course the consolidation of the express segment from Gati. Just for everybody's information, the express segment, which is a new segment in our results, has been because of the consolidation of Gati. So that has been clearly earmarked as a separate segment. EBITDA for the quarter was reported at 130 crores as against 140 crores during the corresponding previous year. Profit after tax was reported at 30 crores for the quarter ended against 64 crores for the corresponding year, which is a decrease of 53.8% on a YOY basis, mainly due to COVID impact. For the MTO, let me now get down to the individual segment results. For the MTO segment, that is the multimodal logistics segment, the total revenue quarter was 1736 crores against 1599 crores.
Sorry to interrupt you.
Period last year, an increase of approximately 9%. EBIT was at 79 crores for the quarter ended as against 60 crores for the corresponding year, an increase of 32%. The EBIT margins stood at 4.53%. Return on capital employed for the MTO business stood at 28.32% on an annualized basis. Engineering.
Mr. Shah, sorry to interrupt you. Sir, your voice is breaking.
Voice is breaking? It's a landline actually.
So there's a bit
now,
is it still breaking?
No, so we could hear, but a few words are missing. But yeah, so I think if you should be.
That's why I chose a landline actually. So
yeah.
Let me see if I can go to the base. Just give me a second, please.
Sure.
Hello, is it better now?
Yes, sir.
Yeah. So coming to the project engineering solutions, the total revenue was at 64 crores for the quarter ended 30th June 2021 as against 117 crores for the corresponding previous quarter last year. EBIT reported at a loss of 14 crores for the quarter. P&E division's performance was primarily impacted due to lower utilizations due to the lockdown and hence the overall impact on the performance. Coming to our logistics park business, the total revenue was 9 crores for the quarter ended 30th June 2021 as against 2 crores for the corresponding period last year. In our CFS and ICD business segment, the total revenue for the quarter ended 30th June 2021 stood at 128 crores as against 119 crores for the corresponding period last year. EBIT was 51 crores as against 37 crores for the corresponding period last year, which is an increase of 38%. EBIT margins for the quarter have stood at 40%. The ROCE on the CFS business stood at 53.63% on an annualized basis. This is primarily due to container dwell time increasing due to lockdown, leading to additional one-time income reflecting in segment revenues even though volumes were down. That is it from our side. Thank you very much, and we open the floor to any questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question, you may press star and 1. First question is from the line of HR Gala from Finvest Advisors. Please go ahead.
Yeah, hello. Congratulations for the reasonably good results in these trying times. Just a couple of questions. First question is, can you just help me with how much is the one-time income which is included in MTO and CFS on account of extra ground rent, etc.?
So I can answer on the MTO. It is tough to qualify everything as one-time or recurring income. But for an example, government grants received for COVID-19 business support in our global subsidiaries would be ballpark approximately about $1.6 million. That would be the approximate ballpark grant received in the month of April, May and June, which is the first quarter.
Okay. Will it continue going ahead?
Nobody knows how the COVID pandemic will be and what the
pan out,
government would be. We would only be able to provide what has happened so far.
Sure. Yeah. And in CFS, how much it is?
In CFS,
go ahead.
Prakash, you want to answer?
Go ahead.
Yeah. So basically in CFS business as well, it's, in general also there are variations from a month-on-month basis. Dwell time goes up and down. So, to put a base benchmark number is difficult, but you could see, if you were to compare, you could see the average volumes and the average, revenue per TEU. And one could do an estimation, but I would say we are hopeful that volume should continue to rise gradually, as my colleague Prakash mentioned. As the lockdown, easier situation improves, the revenue per TEU may drop. It is tough to quantify that.
Okay. No, I just wanted to know how much was the ground rent. In the initial remark you said that the profit has improved because of one-time income of ground rent. So I just wanted to know that.
No, so it's not like a one-time event. Whenever a container is, comes into the CFS, and Prakash will probably explain the process and how ground rent is just one component of it, and it is more of an indication. It's not a one-time, it's not like a one-off item sitting separately. Yeah, Prakash, if you could explain the process.
See, over here, what happens is that when the containers come in and if they stay back, the ground rent starts. Similarly, we did that right away in this particular case also. So if you were to ask me how many containers stayed back and all, there was like...
No, not how many, just total amount of rent, which is sort of one time, which may not recur.
Our EBIT is very clearly, demonstrating that number. If you see our overall revenue, it stood at 128 crores in the June quarter against the 119 crores. So that is the additional that we have had because of the ground rent.
Okay, I understand. Sir, just one question. Why, we are taking this delisting decision. Any particular reason? When, things are looking up so well, company has been doing so well, why do you want to delist?
So let me respond to that. Delisting is not a company decision. It is the prerogative of the promoters, and we see this as a shareholder matter. Company, as responsible, would participate in the process and do the needful as required by the agencies and exchanges. So company is only an facilitator in the whole process. It is a shareholder matter on which a company would not have a view. We're happy to answer any details required around the process and how it works. But just to highlight two key things. One, it is a voluntary process on both sides. Promoters make a voluntary offer for delisting, which is acquiring public shareholders' stake, and public shareholders voluntarily accept or reject the offer, and even the price quoted by all the shareholders is completely voluntary, and they decided what price they want to sell, which is like any other trade in the exchange. And the price that they will finally receive would be driven by the higher price, which is reached 90%. So effectively, it's an entirely voluntary process, and it's between the shareholders and a matter of shareholders. Would not be in the prerogative of the company management to, comment on that.
Okay. Last question from my side. The other income in this quarter has significantly increased. So, Any particular reason for that?
Yeah, Deepal, if you could answer on that.
See, the other income on the standalone has increased, which is the dividend received from EQ of close to around 10 million euros, that is 76 crores.
But I think even in console also it has increased to 16 crore as compared to 6 crore.
So that is, the consolidation is because of, Gati. They also have some other income in terms of, which is not part of the main express business. So they have petrol pumps and many other businesses which actually get consolidated. So other income is a part of all that.
Okay, and maybe forex gain would have been included there?
Yes. Other income includes forex gain and any other miscellaneous items that don't form part of any specific segment.
Okay, but nothing extraordinary.
Sorry?
Nothing extraordinary, I believe.
No, nothing extraordinary.
Okay, fine. Thank you very much, sir. Wish you all the best. I will join in the queue.
Yeah.
Thank you very much. Ladies and gentlemen, anyone who wishes to ask a question, you may press star and 1. Anyone who wishes to ask a question, you may press star and 1. Next question is from Vikram from Phillip Capital India Private Limited. Please go ahead. Vikram, may I request you to unmute your line from your side and go ahead with your question, please?
Yeah, sir, am I audible?
Yes.
Okay, sorry. For this MTO business, one means that we have seen relatively higher number in standalone business. So are we seeing that because of this parcel size impact, cargoes are relatively better than full container, or is it mainly because of longer dwell time or warehousing kind of income? That was one point. And the second question related to delisting, can you highlight more about the process about delisting and time frame? That is my second question.
Yeah, sure. So on the MTO business, it is primarily, like I mentioned, we have done well to hold the business, and on the performance side, because of cost reduction initiatives, the bottom line has been healthy. On the top line, it has been a combination of a mix of volume and the equivalent, freight rates, which is how one could look at it. On the delisting, basically the first part of the process was scrutiny and due diligence by a merchant banker on the top shareholder transactions, which has been completed, and board has given an in-principle approval for going ahead with delisting. Currently, the process is being run for shareholder approval, and postal ballot is being conducted for the same, which should get concluded around 3rd or 4th week of October. Subsequent to the result of the postal ballot, if the shareholders approve the delisting proposal, it would then go to the next step, wherein promoters would have the option to make a formal proposal to the exchanges, and subsequent to that, exchanges would take about a week or 2 weeks to approve that, and then a process starts whereby all the shareholders voluntarily express their desire to sell and the price at which they wish to sell the shares. The promoters, would have an option to either refuse or accept. In case of accepting, they would have to accept the bids from at least as many shareholders as required to reach a minimum threshold of 90% aggregate shareholding by the promoters. And in doing so, when they accept the bids posted by various shareholders, the highest bid accepted by the promoters naturally becomes the price to be paid to everyone. So even if somebody has quoted lower and their offer has been accepted by the promoters, they would still be paid the highest price that the promoters have accepted to pay during the reverse book building process. So that is how the process works. And like I said, another 4 weeks to 5 weeks for the shareholders' approval, another couple of weeks for the exchanges to approve, and then another 3-4 weeks for the process. However, there's always could be a gap between shareholder approval and promoters making the application to the exchanges, depending on their plan around it.
Okay, I think that was quite helpful, sir. And in CFS, we have seen the port volumes recovering close to almost 85%, or we have seen YY decline of in range of 13 to 15%. So for CFS, our volumes are in line with the port recovery, or how is the situation at catchment area? If you can explain a bit on that side.
See, the port volumes that you refer to include everything that is empty container, export containers, and full containers. So first of all, I hope you are referring to the container volumes, because port volume sometimes includes the bulk volume also. But if I were to take JNPT or Mundra or Chennai, any of these ports would have a component combining of empty, full, and exports. So for us, we are more dependent on the import cargo, and clearly that volume is rising, but very slowly. So definitely the impact on the CFS addressable market is quite large, because the imports have fallen considerably, while the exports are trying to go up, and they did rise better than that of the import volume. But still, they are not at the stage where we can call it as a pre-COVID level.
Okay. Got it, sir. Yeah. Thank you.
Thank you very much. Anyone who wishes to ask a question, you may press star and 1. Next participant is Abhijit Mitra from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question. So I have a few questions on Gati. Since we have started consolidating the numbers, can you please share some of the operating parameters of the business, as in what kind of parcel or rather express tonnage they have carried in this quarter? Any numbers that you can share on the e-commerce part of the business that they have done? That's question number 2. Thirdly, if you can, sort of share if there is a uptick in the e-commerce volumes that we have seen till date in the current quarter, whether there is leading to some amount of margin recovery. So these are the 3 questions which I had on Gati.
Yeah. So, as you are aware, Gati is also a listed company, and, as Peter highlighted, this is the first quarter we have started consolidating since our acquisition. And going forward, we would start an engagement with the invest community on Gati as well. And very soon we would have our presentation shared with investors on Gati, and we would be hosting a call as well when we can discuss about Gati in detail. But just to give a high-level information, like I mentioned earlier, April was an extremely challenging month with revenue on express side dipping down to almost single-digit numbers. However, it started recovering from May, and we were already at about 65% by end June, early July. And since then, it has broadly stayed at about 70-75% of the previous month's levels until, let's say, July, mid-August. So it has gradually been improving vis-a-vis last year. So we see a steady recovery. On the e-com side, for Gati, the substantial piece of business is B2B Surface Express, and e-com is relatively a smaller piece of business. However, in the e-com side, as we move forward towards the festive season with all the big billion day sales, etc., we generally expect volumes to go up. And beyond this, we would address Gati-related queries in a separate call on Gati.
Okay. Sure. And on the Blackstone deal, if you can, just share through what is the amount of money that has flown through, any incremental, flow through that we have seen in this quarter, and what is the extent of investment that you have committed on those assets in this quarter, the assets which were supposed to be moved over to Blackstone, the warehouses and the locations that you have, pointed out in your presentation as well. Yeah, that would be it.
Yeah. So primarily you have two questions. One, any additional inflows from Blackstone during the quarter? And second, any additional outflows on the capex investments in the warehousing logistics parks division? Deepan, if you could throw some light on the numbers.
Yeah, am I audible?
Yes.
Hello?
Yes.
Yes, we can hear you.
Yeah. So, the two questions. One is, we received 237 crores. The total deal size for Blackstone was, on the equity front was 380. I'll explain to the structure. 380 crores was the total deal size that we were supposed to receive, out of which 237 has already been received. Balance is to be received through the year as and when the projects are getting completed. Also, there is some upstreaming of money happening through LRDs. So the money that for the subsidiaries which have been, the assets have been transferred to the subsidiaries, as and when the warehousing is completed, there will be an LRD raised, and that money will be upstreamed to AllCargo against the amount payable to AllCargo against the business transfer agreements. So that is the whole structure. So what we have received as of June, up to June, YTD June, is 237 crores against the Blackstone. And we've received some around close to 59 crores of LRDs. Hello?
Yeah.
Yeah, and what was your other question that you had?
The investment in those assets, yeah.
Sorry?
The capex investments, Deepan. Capex investments in the quarter on the warehousing logistics parks asset.
Yeah, so the first quarter, the investments were a little low. So the total outlay on the construction will be close to around, for all the assets put together, it will be close to 200 to 300 crores for the entire year. But for the first quarter, because, April there was a lockdown, the total amount that we have spent is close to around 40 to 50 crores.
Okay. That's all from my side. I'll come back in the queue.
Yeah.
Thank you very much. Ladies and gentlemen, anyone who wishes to ask a question, you may press star and one. Next participant is Prateek Kumar from Antique Stock Broking. Please go ahead. Prateek Kumar, may I request you to unmute your line from your side and go ahead with your question, please?
Yeah, good afternoon, sir. This is Prateek. So my first question is on CFS business. So as highlighted, the volumes have declined by around 42%, while revenues have grown actually by 8% and profitability has grown much higher. Prakash sir mentioned that whatever difference in revenue year on year is related to additional ground rent, but because the volume decline is 42%, so over and above this 42% decline in proportionate revenue, so that would be the ground rent, right? So maybe around 50-60 crore additional ground rent you would have got this quarter.
No, see, what happens is that you cannot count that as a ground rent additional because the containers stayed back, right? So we don't know how many containers were during the lockdown and beyond the lockdown, right? There were certain containers which were there since January and February also, and they couldn't have been out because of the lockdown. So we can't determine actually what is the additional ground rent. We can only say that there is, additional ground rent that we have received, while, there are certain boxes still, waiting for evacuation from the CFS. So clearly there is income which has come from the overall extra ground rent that we have received. I don't know whether we have a separate number because we have not counted it that way.
Right, and has this ground rent been continuing in July, August numbers which you mentioned, still as sort of slow?
Definitely, there are some boxes which continue to be there because they have not been able to evacuate, and those boxes will accrue ground rent until there is a commercial discussion with the customer, and we will decide accordingly depending on the volumes and the business relations we have with the customer.
Right. And sir, on MTO business, this $1.6 million or 12 crore rupees. So is this directly accounted in profit PBIT number, or this is showing through revenue?
So this would not show as a revenue. This would show under the gross margin and would get eventually therefore added as a. This is almost like in the how we at our end measure SG&A reductions and government grants. That is how we capture these. So these are government grants received towards maintaining staff, supporting staff. So these are by nature more towards supporting staff costs of the company, and therefore would be categorized around that line item.
So even the here also the revenues per container have gone up very sharply. So these are related to freight rates, which we understand have been rising globally. So how are the trends now, in 2Q, or have they been sustaining higher numbers? And the benefit of higher realization, have that also flown into the margins? Because if we exclude that 12 crore government grants, the margins look sort of in line with what we have been reporting in past few quarters.
Yeah, so there has been fluctuation on the freight side, but obviously driven by the impact on the business. If you look at the gross profit level, the gross profit level numbers would have come down, and only through significant focus, continued sustained focus on reducing the costs, admin costs, staff costs, and the government support, the bottom lines have been protected, because freight component, when it rises, it almost is also in many ways a cost for us, because while we are selling piecemeal LCL, we also have to buy the container slots. So effectively, I would say the on top line volume side, there has been an impact because of macroeconomic environment, and bottom line positive impact is primarily driven by conscious efforts on cost reduction, staff cost optimization, and government grants as well have helped us there.
And how would be the industry decline for MTO business, where we have declined 12%? One of the, I think, shipping lines or international port company indicated around a 10%, 15% kind of container volume decline for their business. I think in that quarter, in the last quarter result. So this 12% is in line with industry or better than industry, according to you?
So I would say that overall the market would have dropped a little higher than us, is what our perception is. Unfortunately, none of the competitors are listed or ranked that well. But our estimate is that with our sustained focus on use of technology, making people efficiently work from home, and many other initiatives, we would have been impacted marginally lesser than the market, is what our estimate there would be.
Sure. And one question on Gati. So our investment as per annual report is around 195 crore, which is shown as an investment in associates. So post now our stake increasing to 46%. What should be our investment value there?
So Gati shares have been acquired at a total cost of approximately about 450 crores. People, if you could share the exact number, but it should be ballpark around 450 crores would be the total cost.
Yeah. So we did the acquisition in two parts. So there was the total purchase consideration for the acquisition is 429 crores. Am I audible?
Yeah, you're audible.
Yes.
Yeah. So there was a part of acquisition which happened through the SPA and through the preferential allotment, which happened prior to March, so where we stood as an associate, and the open offer completed on 8th April. So that's when we acquired the balance 26%, and then we now having control, we hold around close to 46%, and we have a board control. So for the quarter of June, we consolidated the results. The total outlay on the acquisition is 429 crores.
And how much do you add in gross block correspondingly?
One second. So we've done a whole PPA exercise. Just give me a second. I'll give you the exact numbers on that. I'll come back to you on this particular question. I just can't locate that exact amount.
Sure. I'll get back to you. Thank you.
Yeah.
Thank you very much. Next question is from Mutulya Shah from AllCargo Logistics. Please go ahead.
Thank you very much for the opportunity of the question. I have a specific two questions. During this quarter, our company has acquired a controlling stake in Gati by 46.86%. And as mentioned in the note number 9 of this Q2 result, that the promoter of the Gati has the matter is sub judice and the promoter of the Gati Limited has you had some fight with the Gati Limited. So I just wanted to know the fact of the case, being the new investor of the company. That was the first question. And the second question is, who are the major competitors, global as well as in India, by the nature of our business, who is having more than 80% in the MTO segment? And specifically, we have a listed name of the competitors who are listed in the different stock exchanges. Thank you very much.
So, as I understand, the question is around the MTO competitors listed on the stock exchange. So, to that, as I said just in my previous response, there aren't too many MTO or the LCL consolidation companies which are listed. Some of the largest players, apart from AllCargo EQ Worldwide, are Vanguard and Shipco and the Worldwide Alliance. These are some of the bigger players in the market, apart from us, and they are not listed. So there's none in the listed space that we can think of in the LCL consolidation among the large companies. Secondly, on the matter around the Gati's erstwhile promoters, the matter is sub judice, so it would be inappropriate for us to comment on it.
No, but just wanted to know the fact of the case. I don't want to get into the allegations. What are the fact of the case of the matter?
Yeah. So what I can share with you is that there was an agreement between the erstwhile promoters and AllCargo on acquiring a controlling stake in Gati, and subsequent to which AllCargo has, as Deepal explained, acquired close to about 46-47% stake in the company. The promoters' shareholding, the erstwhile promoters' shareholding in the company is reduced to a much smaller number, of which also a large substantial part, as we understand, is in itself under a legal dispute which they are having with other parties, not concerning us. And subsequent to the acquisition of Gati, we at AllCargo have been running the company and putting in the best efforts to drive it towards higher revenues and better profitability. The companies, and we see that there could be impediments in the path to progress on account of roadblocks being created, and with that view, AllCargo has called for the general meeting to remove Mr. Agarwal. Those are the facts of the matter. Beyond that, it is not appropriate to comment on a matter which is sub judice.
Sure, sir. Sir, what is the business sense for us, AllCargo, to look into the company like Gati Limited, who are into the huge loss? And as it said that there some problems in between the erstwhile promoters on the legal rights in the company. So what is the business sense for AllCargo to invest into this Gati Limited?
Yes, so I would answer that. Gati, as we all know, as a company, pioneered the concept of express logistics in the country It's still among the top two biggest and the biggest among the listed companies in the express logistics business, with a substantial presence covering almost 99% of country's pin codes. As a company focused on international logistics as market leaders in the global consolidation space, we see immense synergies between Gati and AllCargo to offer door-to-door logistics solutions. And on that account, we believe that there are great synergies in domestic express business and the international LTL consolidation business that we have historically been operating in. As far as the poor performance and loss is concerned, yes, we recognize that there have been challenges, but at the same time, we are also hopeful that we would be able to put in the right management practices, bring in the changes required, and with the support of excellent management team we already have at Gati, and with more people being added from our side, we should be able to see a significant turnaround in the company. And therefore, we believe that in the long term, the company would be beneficial in strengthening the door-to-door business, and on its own as well should do well going forward. And with that belief, we have acquired the stake in the company.
Sure, sir. I appreciate your answer. Last point to ask you is by what time we are expected to issue a postal ballot for shareholder approval for the voluntary delisting?
So postal ballot should get offered now in the next.
Yeah, the work is in progress. I think we should be issuing the postal ballot in a week's time max.
Yeah, so in the coming week, the postal ballot should get issued. And as I explained earlier, it should be about another 4 to 5 weeks process for the approval through postal ballot, subsequent to which promoters would make an offer for delisting, a formal application to the exchanges after making the arrangements for funding at their end. So there could be a gap in that, which is completely a prerogative of the promoters, and we would not be able to comment on that.
Sure, and that approval would be, if once the application is made, the approval from the stock exchange would be valid for the 1 year from the date of approval. The understanding is correct?
Yes, so after the postal ballot approval, the promoters would have up to 1 year to arrange for the funds and then make the formal application to the exchanges for delisting. That is as per the provisions of the process.
Sure. Thanks, and for any further questions, I will be in touch with you. Thanks for this opportunity.
Thank you.
Thank you very much. Ladies and gentlemen, anyone who wishes to ask a question, you may press star and 1. Next participant is HR Gala from Finvest Advisors. Please go ahead.
Yeah, I just wanted to know, we had some legal case going on because of this COVID situation on this, I think, ground rent or such matter. So has any outcome come?
No, it went up to the Supreme Court, and thereafter the Supreme Court has given it back to the High Court in Delhi to collect all that information, and the matter is sub judice. That's why we are unable to comment more on this matter.
Okay, I understand. But still we are accounting in our account.
Yeah, because
on accrual basis.
It is simple. No, it is simple that if you come to take delivery of your container, which many have come and taken, we'll have to charge you, right? Whenever the decision comes, then we'll have to, abide by whatever the Honorable High Court says.
Okay. Now, sir, looking to the trend, you said that in the month of July, August, September, not much of the progress has happened either on international side, not much, either on international or on the local side. How do you see going ahead? Because, we are expecting the Indian economy to degrow by, say, anywhere between 9 to 14%. And I think recently the World Bank has come out with certain projections where even the global economies are also not likely to do that well in this calendar year 20 or maybe part of 21. So how do you see the overall volumes getting increased over a period of time?
Yeah. So if you look at the MTO and the CFS business, primarily logistics as a business is about carrying trade. And trade is in turn linked with, the overall macroeconomic environment. So therefore, any upward or downward change in macroeconomic environment affects us positively or negatively. From our perspective, as a company, we continue to strive to do two things. One, continue to increase the market share in the available addressable market, whether it is for CFS or MTO, and try to continue to optimize costs and see what best we can do. Beyond that, if the overall macroeconomic environment itself is challenging, there's little that we can do about that. In terms of the overall outlook, like you mentioned, there's a consensus among various, researchers and agencies that the Indian economy is likely to be between, as you said, around 9 to 13% as we read through. So beyond that, I think, we are in times when even economists are finding it difficult to forecast how the macroeconomic environment will look like, whether there'll be a second wave of coronavirus pandemic or whether, in India, we are yet to get over the first wave. We have still not even reached the high point. So tough to predict, whether, but at the same time, there are very positive things as well. The mortality rates have gone down significantly. The virus is understood much better. So we are hopeful that, we should be able to come out of it soon. There's significant work happening on the vaccine. And all of that should lead to a revival in the macroeconomic environment. But we'll have to be watchful. Tough to predict anything. We'll, continue to be watchful and do our best.
Right. Now, sir, on the capital expenditure side, we said that we wanted to spend about 200 to 300 crore on logistics, but have spent only 40-50 crore so far. So are we likely to spend the balance amount in the remainder of the year?
So basically, some of the work were also halted due to the pandemic situation. So some of the construction work was also put to a stop. But yes, the construction activity is also picking up. And based on the requirements of the business in terms of warehouses that need to be constructed for being leased out, we would make the investments in the construction as required.
So can you give me some ballpark figure, like what kind of capex we could have in FY21 in logistic part and other businesses?
Sure. Deeply shown to answer that.
So we will be able to spend another 250 crores approximately because we'll have to catch up with the construction. And this will needs to be completed and handed over to Blackstone. So we will spend that 250 crores in the upcoming months up to March 21.
Okay. And in any other businesses, do we have other capex plans?
No. Other than that, our total capex outlay is around close to only around 13 crores for the entire.
In this quarter.
Yeah. No, in the year itself, we don't have much maintenance.
13.
Yeah. We just have some maintenance capex. We don't have large capex.
Not large capex. Okay. Thank you, sir.
Nothing planned large.
Nothing planned as of now. Okay. In Gati, will you require anything to invest more?
As of now, we already pumped in around close to 100 crores to the preferential allotment. So we believe with this, Gati should be able to sustain its operations and grow from there. We already, have had a consultant who's looking at it, and we're trying to turn around things there. So as of now, we do not believe, but we have made a provision of close to around 40 odd crores in case there is any emergency funding to be required.
Okay. Thank you, sir. Thank you.
Thank you very much. A reminder to all the participants, you may press star and 1 to ask a question. Next participant is Pratik Kumar from Antique Stock Broking. Please go ahead.
Hi sir. Thanks for the follow-up. Just wanted to understand what would be our net debt position now post the Gati investment being completed.
So our net debt is as of June, other than Gati, is at console level is 997 as of June end. There is a Gati debt of 353 added to it. Adding it up at a console level, 1350 is our debt.
350 is like assuming 100% ownership. We have to reduce minority interest.
Yes.
Right. Thanks.